There are some charts that we should be tracking in this market. I want to talk about them. I am Dr. Stock, Doctor of Education, and should an Oreo go to the dentist when it loses its filling? All right, we're going to look at DXY. We're also going to look at the US 10-year Treasury yield. We're going to do a technical analysis breakdown on those two things. I'll tell you also about the things that I've been paying attention to in this market and some of the earnings that I capitalized on already. And also where you can see my buys and sells through the Discord, where you can get my options course, and then also about the free stocks from Moomoo. In the meantime, let's get right into this. So the very first thing that I want to share with you is DXY itself. So let me put that up on the screen for you so you can see it. So this is tracking the strength of the US dollar. And so right now, we are below this previous high that we had back here where it peaked out all the way going back to, let me see, September the 28th. Is where we peaked out on that, and it was all the way up at 114, almost 115. And then since then, it sold off significantly, and we had different market sell-offs and rallies throughout that time. Basically, if we see the strength of the dollar go down, that could be good for companies and their earnings, especially when foreign stocks or foreign business is involved in that, because a strong dollar can cut into those corporate earnings. So we want to be on the lookout for that. So as I zoom in here, what I want you to see is this 50-day that we have, and we're coming down towards it. Got a nice little bottom wick coming off of that, and that's right around, let me see, we can actually tell you right where that low price is. 105.36 is where we bottomed on this thing. And something that I'm looking at right now is the possibility that this could be a potential bullish flag that we have coming up on the US dollar. So do we see the strength coming off of that? Well, let's delve into this a little further. Go to the 1 hour chart to see a little bit more what's going on that flag part of this. So also, let's put up the drawings that I have for this one as well. And you can see the top of that flag, we want to stay below it. And there's also a minor trend line in here that we should also be paying attention to, because that is actually where we got stopped out so far when we look at this, and we have retreated from that line. So that could be a little bit of a buffer or a cushion for us in the meantime as we watch that. And then this Fibonacci line that we have right here is right at about 106.25. So as that descends, that should be good for the markets as we see the US dollar weaken rather than strengthen. So it seems a little counterintuitive, but that's something that we want to be aware of, something that we want to watch. These minor movements won't have a huge impact up front, but when we see those go up significantly, that's when we can have that. In a previous video, I talked about this compared to the SPY, and look where we bottomed out recently for the strength of the US dollar, and it was right around 100 on DXY. We actually had a double bottom come down in here, and what were the dates that happened? So let me zoom in so we can see those dates a little bit easier, and we're also going to exaggerate and move up. There we go. Now it's in a better spot in your screen. So the first bottom that we got was right around July the 14th, and then we move from there. July the 18th, which was a Tuesday, is where we got that second bottom, and things started moving up on us. And it was July the 19th is actually where the markets really started to sell off going into August. So this is something I think is really worthwhile paying attention to, and something that I've mentioned previously in my video. I compared it to the SPY, showing that there's an inverse relationship between the two of them. So if we want to continue in a bullish direction for the markets, we actually want to see a weaker dollar come into play. That is going to be the thing that is going to allow markets some more upward pressure as we look at that. And then I should also put up for right now, I guess it would be a good time to transition to the US 10-year Treasury that we have on here. And for this one, I got a whole bunch of lines drawn on here. So you can actually see the ascending wedge that we had going on right now. And this goes all the way back to, if I put my cursor back here, and this is the hourly chart that we're looking at. This goes back to Wednesday, October the 4th, and it played out and actually broke the formation coming out. And this is a reversal pattern that we look at, and you can see that reversal that we got so far. And actually right here on the chart, right where that cursor is right now, that's the spot that we want to pay attention to. That is the critical moment that we're at right now as I record this video. And like I said, this is the hourly chart that we're looking at, not the daily chart. So let me zoom in a little bit closer to that, and we'll see what's going on. This trend line that we have right here is about where we keep finding resistance coming in, and it did get broken before. So resist, broken, crossed back under as it broke out of the bigger formation that we had. And then as we zoom in here, we actually have an inverse head and shoulders pattern building up in here. So let me grab the drawing tool and I'll trace that out quickly. There it is. And One thing that you notice as you look at that, and here's the neckline on it, by the way, look at that point of confluence that we have. It is important that we get rejected off this line. Now, being an hourly chart and the fact that I'm recording this video now and I'll be putting it out in a little bit, that's something that we want to pay attention to as well. Now, we want to look at this a little bit closer yet. So let me see if I can get this nice and big on your screen for you. Look at these high wicks that we have. There we go. There we go. Switch that, and then I'll get rid of these straight lines because they don't really mean anything. There we are. Look at these high wicks that we have. This is downward pressure that we're seeing right now. It is possible that we don't break that neckline. We have two other forms of resistance coming there. This light blue line coming down from the top, by the way, that is the 50-period moving average that we're looking at. And it has a negative slope, which is good because that can mean that we're on the way down. It does not make confirmation. It would be nicer if we could actually come down to this 200-period moving average that we have working on its way up. We caught support just recently. So this was at 3 a.m. that we found that support right at about the 4.8. So on the US 10-year, we want to look for that. We want to look to break that 4.8. I think that'll be huge for the markets. Breaking that, coming down through 4.7. Let's actually reset the chart view so we can see where these critical lines are as we look at them. So I have a whole bunch drawn on here for you. So breaking 4.8, I think would be very bullish for the markets. We want to watch for that. Hopefully this inverse head and shoulders pattern doesn't pop out of there, because if it does pop to the upside, markets are likely going to sell off in light of that, especially as it heads back up for that 5% mark. Markets do not want to see a break above 5%. It gets pretty scary. And if you saw StockMo's video, and I know some other YouTubers that talked about Bill Ackman saying that he's closed his short positions and started flipping it around in order to buying bonds, that can be something that can decrease the yield as they buy the bonds, because it pushes the bond prices up because there's more demand for them, which pushes that yield down. And we do have that concern right now about the U.S. being able to service their debt over time, especially as bond yields get out of control, as the debt to GDP ratio that we have, it has not been great for us. As a matter of fact, I think it's near just under 140% debt to GDP ratio. And so we actually want to reduce that as much as possible. One way that happens is through GDP growth, by the way, that we can reduce that number. Another one is to offload the debt. So if both of those two things can happen, that'll be a best case scenario. So we would get growth in the economy, plus we would have less debt coming from the government, which, by the way, my goodness, please, government, reduce the darn debt. Like there's got to be a way to trim the fat rather than just throwing a whole bunch of money at problems. And that's as political as I'll get on this channel here. So we'll move on from there. We do want to see, I'll put this chart back up here. This is the US 10-year yield that we're looking at, and this dropping is going to be great for us in the near term. And it does come to a point as we look at this that should that continue to drop too far, that could be signaling that it's a flight to safety, which means that they would be moving money out of the markets. I think for a little bit of time, as that yield comes down, we're not only going to see that demand for bond comes in, but I think we'll also still see that risk on behavior still happening in the stock market. So I think people are looking for that immediate jump in appreciation in bond prices at the onset. And I also think that during that time that we're still going to have risk on behavior in the markets. And now, mind you, big tech earnings happen starting in the after hours today. So by the time that you watch this video, if the earnings haven't happened yet, well, then we can, keep our eyes open, see what happens. And if earnings have hit, which I am bullish on those earnings, we'll find out if that is on target. We'll find out if it's misplaced. I will adjust to it. Either way, I have my position right now. I will share with you in TQQQ to play the long tech play side of things, assuming that we do get more of a bullish ramp coming out of the earnings that we get from Microsoft and Google today. We also have Meta and Amazon coming up the next 2 days. I believe Meta's tomorrow, Amazon's the next day. Watch my video that I put out yesterday if you want to see that, if you haven't already seen it, on big tech earnings, and it has a menacing looking bull in the background. So check out that video if you haven't already. So if that does come out long, my TQQQ calls should print out very handsomely for me. And if not, those TQQQ puts for a hedge is what I have there. Now, what I did in order to make that hedge happen and make it worthwhile, I went farther out on the expiration for the calls because I believe that that's the direction that we're going to go. And I took a much smaller investment into a short option with a shorter expiration, because if big tech doesn't produce, if it doesn't perform, that's going to drag the market down very quickly, in which case that short hedge position that I have should be enough to at least cover some of my investment in my long positions, if not all of it, depending on what sort of sell-off that we would get. So that's an idea of how I played that. So let me tell you where you can see my buys and sells, and also tell you about my results. So actually didn't write them down this time. So let me tell you about them. Yesterday, I had an intraday play on TQQQ for 25% profit. So I bought it, and then a few minutes later, I was 25% up. Sold it. It was nice. I enjoyed it. Now, Coca-Cola and Raytheon, which is now RTX, KO and RTX are the symbols. Coca-Cola was a 30% profit that I made on an option that I purchased on Friday. Didn't know if we would see the run up on Monday, but I thought that we were oversold, and I thought that I could capitalize on that opportunity, and I was able to. RTX was one that I was like, this is also oversold. It's a defense stock. So with the geopolitical tensions and stuff that we have going on, this is probably also going to do really well. There was a big recall that was going to possibly be something that really chewed into their ability to be profitable, or as profitable as they could be given that recall, and they were able to rotate out of that very well with some excellent guidance coming out of that. That one printed for me, I believe, 105% up from Friday. So it's been a great time with that. Still holding out on Disney. I actually have a position in Target as well. If you want to see all my buys and sells, by the way, they are available through the Patreon. You can actually go over using the link down in the description for the Patreon. There's actually a join for free, which I haven't, that just got added by Patreon, by the way. To get access, you actually have to choose a tiered membership to get that. But when you join my Discord, you can see my buys and sells that are over there. Along with that, I have my Tesla stock price prediction, which I'm going to update given their most recent earnings. So I'm going to put out for Q4 how I think it's going to go. Q4 prediction is already there, but I'm going to do an updated one now that we have Q3's results and some further commentary on what I see coming up for Tesla throughout 2024 and 2025. Now, mind you, this forecast does go out through 2030. And then the portfolio's amplified options course, that this right now is designed for the complete beginner. For options, it will move up through advanced trading strategies. So come on over, check those things out, because options are what I do to amplify my portfolio to really build up the extra cash in order to put into my longer positions that I have, my investments, rather than just my trades that are out there. And I do that using Webull, which I just had a person in the Discord today ask me about an options calculator. They actually have it built right in. When you go to the option, you can scroll down and it will show you how to calculate the price of your options. It also has an options analyzer tool, and it's a wonderful user interface. Their earnings calendar, by the way, top notch, wonderful. And not only do you get all that stuff, but just by signing up using my link and making a deposit, here are the deposit levels, you get free stocks on top of it, including a free stock of SoFi and our share of SoFi. And I do love SoFi. Bullish on SoFi, long-term investor in SoFi, and I am looking forward to their earnings. I think that it's going to be another good one for us. I am really excited, looking out for SoFi. So guys, let me wrap the whole thing up here. DXY, watch that chart, and I use TradingView in order to do that for my videos. It displays very cleanly. So DXY, watch for that one. Watch for the dollar to either strengthen or weaken, because that's going to impact the direction of the markets. Also, 10-year yields, watch that as well. Just type in, if you're in TradingView, US 10Y, so US 10Y, type that in. You can track that as well. Staying below 4.8 is going to be very good for us. Crossing down below, actually 4.5 is going to be like game on, rally on. So while we watch those yields drop in the meantime, or in the short term, I should say anyway, for those bond yields, I think that's going to be very bullish for markets. At some point in time, should we see a lot of weakness in the economy or bigger geopolitical concerns or other macroeconomic concerns, then at that point in time, it can actually become more of a flight to safety, where you would see more people jump into bonds and more people jump out of the markets. So at some point, there is some tipping point where they won't move in tandem with each other anymore, that they'll actually start to move inversely from one another, where you see bond yields drop, and because more people are buying bonds because they're looking for that yield, because they're not going to get that same thing guaranteed from the markets themselves, that outlook would have shifted. So that's my commentary on that. Tesla, by the way, I did say that I'll give an update, so I'll give a brief update on Tesla. Tesla seems to temporarily have found bottom. Now, mind you, this could be a little dead cat bounce that we're looking at for that one. Let me take that down so I can show you the charts. There we go. So here's the hourly chart that we're looking at for Tesla, and you can see as we're tracking it here, I have the fibs drawn on here for you, and at 220 looks to be the area of resistance. We peekabooed over that for just a little bit when the market opened today, but then have since retreated from that level. It looks like we have room down to about 214 in the meantime. We did bottom out around 208, and then before that was around, let me put my cursor right on that candle right there. The low price that we hit was 203 almost. We were just below that, 202.51. And that does put us on the bottom of this trend line, which also, when you look at the daily chart, and this is something that you want to pay attention to. There we go. So we'll zoom in right here because this is the 200-day. And right now we are above it, but look at that high wick that we have. It is possible that we push down below that 200-day as we were already beneath it. Well, let me move it a little bit so the volume sticks don't get in the way of it. So there's the yellow line. That's the 200-day. And we did cross beneath it, went back up above it. It is possible that we push down and start to break lower on that one. So we're going to have to watch that one. The Fed keeping rates higher for longer is going to be concerning. And it is possible, I'm still kind of deciding, going back and forth, if I want to take a short position on Tesla or if we're going to have a little bit more near-term bullishness. The daily chart is suggesting right now that we're oversold as per the RSI. So that's one thing that keeps me out because, how much further do we bounce from here? And then I also am looking from there. Actually, we're down to, just under 217, 216 we're actually looking at right now. It is possible that we start to see that move up, but it's also possible we break down below that 200-day and turn bearish on this thing. So we're going to have to watch Tesla a little bit longer to see where that bottom happens to be for us. And I am a long-term investor in Tesla. So for me, it just turns into more cheap shares. Thank you guys for watching this video. Let me know what you think down in the comments about the strength of the dollar, the DXY for the US dollar index, and also 10-year Treasury yields. What do you think about the market going forward from where we're at right now? What about big tech earnings? If they go, I think that the market is going to, if they hit big, the market is also going to pump big. And if they miss, and if we sell off from those, the whole market, I think, could possibly go with them. But those are my thoughts. Let me know your thoughts down in the comments. Join me over at the Patreon. Join my community members that are over there. They're absolutely wonderful and astounding people. I am blessed to have them, and I'd love to have you over there too. And then free stocks from Moomoo. Don't forget about them. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.